Hi everyone, welcome to week 4 of the course. For week 4 of the course, we're going to focus on monetary policy. You'll notice that the Fed is very important in many of the decisions that we make. And this week we're really going to focus on the Fed and how they influence decisions that we make in the market. But it's very important to know how the Fed will look and evaluate these decisions that are present. So for this week, I have some resources up here for you to review. You also have your discussion board, and you have homework number 4. For the discussion board, make sure to have your first post by Thursday, 2 peer responses, and it can be to any of the questions that I post as well, if you'd like to. But with your initial post, make sure to focus on having APA formatted in-text citation and reference to support your work. So let's get into monetary policy. When we look at money and banking, you notice that there's a lot of decisions that are being made. And in this chapter, we're going to be defining money. Then I want to look at measuring money, the role of banks, and how banks create money. So money is going to hold 3 defining characteristics. Money is used as a medium of exchange, money is used as a store of value, and money is used as a unit of account. When we look at the functions of money, money can hold many different roles, but these functions of money are very important to evaluate in our economy. We also have 2 types of money. We have commodity money, which is anything that holds value, and we have fiat money. And fiat money is the money that we have in our pockets. It doesn't really hold any value. The only reason why it holds value is the government decrees that money has value. Now, there's 2 ways to measure the money supply. We define this term called liquidity. And liquidity is looking at the ease at which things can be converted to cash. The most liquid asset is money. And M1 is the most liquid of assets. When you look at M1, you're going to be looking at how things are going to be, how easily something can be converted to cash. So with M1, you have coins and currency, checkable deposits, traveler's checks. With M2, you have savings deposits, money market funds, and CDs. M1 is more liquid, but also M2 is much larger than M1 because M2 includes everything in M1. But that's the way that we define the money system. Now, the role of banks. The role of banks are very important in our economy. They create a lot of opportunities for the economy to strive. Banks connect savers and borrowers together. And what I mean by that is a bank will allow savers to put money in a bank, and then borrowers will go to a bank to get money out. So that's very important to evaluate. Banks hold a very important point in our economy. So banks connect both those savers and borrowers, and they create opportunities in our economy to connect those savers and borrowers. When we had the recession of 2008, one of the challenges that we were facing, banks were not lending money. And when banks were not lending money, that created a lot of challenges because that created a very difficult issue. And the issue was, how could we actually create a stimulus in our economy if people weren't lending money? So we really had to create some opportunities. And the opportunities was banks needed to loosen the grip on the money. So when people wanted money, they could be able to actually borrow money. Then the last section in this chapter is going to be a look at how banks create money. Banks will be creating money through what's called the multiplier system. For example, if the Fed will require a bank to hold 10%, for example, at a bank. When a bank's required to hold 10% at the bank, you'll notice that a bank is forced to hold that amount, but they're able to loan out 90%. So if someone goes to the bank, out of that $100 deposit, they can loan out $90. And when this occurs, it creates a lot of spending from an initial deposit. And I think you'll find it a very interesting section as well. If you need me to pre-grade your work, please let me know, as I'd be more than willing to do so. But I look forward to your effort this week and your analysis.